Abu Dhabi's foreign trade constitutes about 65.4% of the Emirates' GDP, representing 953.24 billion dirhams. That's according to preliminary estimates of the year 2013. The Economic Report of the Emirate of Abu Dhabi 2014, issued by the Studies Division in the Department of Economic Development in Abu Dhabi, highlighted the continued commodity exchange between the Emirate and other countries in its various forms as one of the main pillars of economic development. The report stated that the value of commodity exports for Abu Dhabi, including oil exports, amounted to 522.9 billion dirhams in 2013, an increase of 8.57% compared to 2012. Of this, 93.8% of the value resulted from oil exports that increased by 8.6% compared to 2012. Abu Dhabi's non-oil exports amounted to 16 billion dirhams in 2013, reflecting an increase of 3.8% compared to 2012. Non-oil exports increased by 34.3% between 2011 and 2012, with re-exports rising by 11.6% to 16.45 billion dirhams when compared to 2012. And the Abu Dhabi Chamber and the Brussels Enterprises, Commerce and Industry have signed a memorandum of understanding to increase and widen the scope of economic and investment cooperation. To support this, His Highness Sheikh Hazza bin Zayed Al Nahyan, the National Security Advisor and Deputy Chairman of the Abu Dhabi Executive Council, received Her Royal Highness Princess Astrid of Belgium, who is heading a high-level business delegation on a visit to the UAE. They're expected to meet the heads of a number of companies to sign investment deals and enhance cooperation between the two countries. The total volume of trade exchange between the two sides reached 7.7 billion dirhams by the end of 2013, with many Belgian companies operating in Abu Dhabi and contributing to the Emirates' social and economic development. Dubai has sold its 8-year-old 17.4% stake in the London Stock Exchange, making a 77% gain on its investment. The stake was sold by Bourse Dubai, a holding company for Dubai financial markets, and Nasdaq Dubai, and the biggest investor in the London Stock Exchange. Isa Kazim, the chairman of Bourse Dubai, was quoted as saying that the shares had been sold at a price near an all-time record for LSE stock. The shares are believed to have been sold in a placement transaction arranged by Merrill Lynch, Barclays and Nomura. At a slight discount to market price, they fetched around 7.6 billion dirhams. Dubai bought the shares at the height of the pre-crisis boom in 2007 for around £790 million. LSE shares have soared more than 30% in the past year as a result of the strength of a strategic shift by the exchange to move towards greater diversification of investment asset classes. Bourse Dubai's exit will leave the Qatar Investment Authority as the biggest shareholder in the LSE with a 10.3% stake. Low-income workers are sending as much as 80% of their income home. That's according to the latest statistics from money exchanges. The cash sent home by those earning lower wages in the UAE accounts for 3/4 of all remittances from the country, with the industry stating that low-ticket remittances to or those below $400 by blue-collar workers account for over 75% of the total number of transactions. Additionally, trends outlined show that blue-collar workers also send money to their dependents every month, unlike white-collar workers who wait for a good exchange rate. Although white-collar workers clock in fewer transactions, the value is higher as the average size of their remittances is 3 to 4 times greater. The average amount of money sent home each month by low-income workers is just over $320, the equivalent to about 1,200 dirhams.